When people find out that you're a trader, the first question that's usually asked is, what markets do you trade? Now, most people understand stock trading, less understand futures trading. But when I mention Forex, a puzzled expression crosses their brow, and I'm almost forced to tell them that it's just simply currency trading, trading one currency for another. And I tell them that it's no different than when they exchange their home currency for a trip to another country that uses a different denomination. Again, more questions about how you make money doing that, and the topic of pips comes up in relation to account size and risk. But by then, their eyes have glossed over and the topic changes to sports. But when I first started trading, Forex was my product of choice. As time went on, experience grew, and other products such as the futures market came into play. I think currency trading is a great market for those entering the trading arena, and I also think that the longer-term time frame charts is the place to start. Now, the number of $3 trillion a day being traded, it's a little misleading. And as opposed to other markets, there's no centralized exchange in the currency market. As a matter of fact, you could say that many of the Forex dealers actually run their own exchanges with their own books, with their own positions. I don't want to burden this article with a rundown of the entire setup and how it affects trading, but it's important to know that the volume traded that is often stated, it's not really accurate. The fact is that dealers are net long, net short, and they must hedge that risk off to another exchange. Most of this volume is simply risk being transferred from one tier to the next. The important note is that this $3 trillion has a substantial makeup of offsetting risk. So don't be swayed by the big numbers as a selling feature. Now, the big draw to trading currency is that anybody can start with a small trading account. You do not need to start with a $10,000 account. And the truth is, with some brokers, you can start with less than $100. Of course, don't expect a windfall trading that sized account, but it really does help you get your feet wet. I started with a little bit more, but it was nothing near what I would have needed to trade crude oil, gold, or a host of other vehicles. Now, in some markets, you can expect slippage as you wait to close out a position and for someone to take the other side of your trade. In currency trading, opening and closing a trade is not really an issue for the levels that many retail traders trade at. Unless you are trading in times of extreme volatility like during the NFP releases, you can get in and out of your desired price as the broker just basically takes the trade. Tools for trading are important, and most brokers offer charting packages and even news feeds to their customers. Now, while some charting packages can run you over $200 a month, you can grab a charting package, usually MetaTrader, directly from your broker. These charts are perfect for traders who trade pure price action and those that need a ton of indicators on their charts. If I fire up a free platform like MetaTrader, there are indicators I have never even heard of. The issue with the selection is it does tempt you to find the perfect indicator and settings to help you capitalize on trading opportunities. Before long, you become so involved in finding an indicator combination that you've wasted the time where you could be testing and trading a simple trading system or one that's already been tested and proven in the markets. Now, interest rates are very important in currency trading. The great news is that you can even make money on the differential of the interest rates for the currencies. When you sell a currency with a low rate and buy the higher rated currency, you pocket the difference. So in this example, say I want to trade the Aussie US dollar currency pair long. The Aussie rate is 4.5 and the US rate is 0.5. So I would sell the US dollar and pay 0.5% interest, but make 4.5 on the Aussie, which leaves me a net 4. Now, as a matter of fact, this currency pair made up a nice bulk of my trading income in earlier years, and the interest differential was icing on the cake. You can really only benefit from this differential during longer term plays, which is why a good swing trading strategy is something that you should consider. Now, there's been so much hype around Forex that a new industry popped up that catered to those seeking easy riches, but it never delivered on the promise. Essentially, you downloaded an EA, which is an expert advisor, usually from MetaTrader, and it would trade your account when certain conditions occurred in the market. The coders of these programs made easy money as marketers promoted these nonstop for years. There was never a shortage of buyers. But there was a shortage of successful traders, though, as the hype was just that, hype. Wall Street pays top dollar for the best minds, the best programmers, and their job is to produce these types of computerized trading systems. The average Joe or Jane public should have known that paying $300 for an EA was just a disaster waiting to happen. Now, if you want to make money in the markets, or at least have a fighting chance, look into reputable trader trading companies that can really help you get started on the right path. So why Forex? Number 1, a low initial deposit. 2, free trading tools. Number 3, really low risk of being locked into a trade. 4, capitalize on the interest rate differentials. These are the reasons that I approach currency trading as my initial product, but I intentionally left out the methods I use to trade it. There are so many forums that talk about Forex and even have strategies that you can try. The problem I found is that while there's some decent information on trading forums, it does seem that people with something to prove litter the boards. They're always ready to spout how great they are and have no problem ridiculing other traders. I think that forums have the potential to discourage and misinform people to the extent that they give up or just go broke. As a budding trader, you can go it alone or just join up with a proven company that's in the business of educating traders. One caveat though, most of these companies are just stuffed with educators and not traders. So ensure that you are dealing with people that are in the markets a majority of the time. Even better, find a company where the coaching staff are diverse in the markets that they trade.